In March 2022, ILAM Fahari REIT put out a cautionary statement indicating intent to restructure the product, and a year and 5 months later, the structuring process began, and there's an offer in the market right now to buy out retail investors with a premium of about 83% at 11 shillings per unit. And we are delighted to have Einstein Kihanda, CEO, ILAM Asset Management. Thank you so much for your time.
Thank you very much, Julians. Glad to be here.
Einstein, it's been a while since we sat down. Glad to be with you here. We are just counting down 3 days to the close of the offer date. How are the numbers looking like in terms of reception? I can imagine that premium is quite something.
Yes, it is quite attractive, and I think with 3 days to go, I believe I'd say we are doing quite well, and I think that by the time we conclude this the offer period, we are confident that we are going to be able to get significant uptick. And I think the issues we are really tackling are really to do with accessing a lot of the unit holders and dealing with issues of accounts. And I'm sure you've also seen in your engagements with the market issues of dormant accounts, addresses. So a lot of administrative issues that we are dealing with. And I believe we will be able to overcome this. And we have been actively engaging the brokers. We've trained the brokers. We've engaged with them. We've had webinars, including one that we had yesterday. So we have been on a continuous process of engaging with the unit holders through the different channels and forums to enable us get to a point where we are able to fully access all the unit holders.
Okay.
So I think you're doing well. We're doing well.
Sounds good. Let's walk back a little bit. I like, whenever I think about the ILAM Fahari REIT, I like going back to May 2020. And sometimes I look at the turn of events, Einstein, and I have to ask myself whether it's a statement to the level of due diligence that you conducted before inheriting in quotes, this product from Stanlib. Was it a timing issue? Was it a DD issue?
Let me put it this way. If you look at where May 2020, when we took over the REIT, what we took over were the rights to manage the REIT, which Stanlib was previously doing. And in terms of our understanding of what was happening with regard to the REIT, we had a fairly good understanding. But just to highlight a few issues relating to what then happened. If I look at the biggest factor, one of the biggest factors was, of course, we took over in the middle of COVID. So COVID had just been announced 2 months before, and we all went into lockdown. And as a result of that, we found ourselves in a situation where a lot of the tenants who are, say for instance, in our flagship property could not operate, whether it is restaurants, colleges, and other institutions. So we found ourselves in a situation where we were going through a process of negotiating with tenants, concessions, asking for discounts. And the reality was, a tenant tells you, my business has been closed down because of government regulations. I cannot operate. So where do I get the money to pay you for rent? So we had to engage in a individual case-by-case discussions and negotiations. So that was the first issue. But the second issue was the fact that it was also at a time when the anchor tenant at Greenspan Mall now was going through a financial crisis. Yeah. And that affected all the outlets in which they were tenants. So again, we had to go through a process of recovering whatever amount of money were owed in terms of outstanding rent, deposits, etc. To the extent that we even had to distress the tenant, and eventually by the end of 2020, we had successfully exited them out of the building, and we then engaged in a process of seeking for a new anchor tenant. And that is how eventually we were able to get Naivas on board, and they opened, we signed a lease that was effective August 2021. And they then opened the store last year in February. And that has really enhanced the vibrancy of the store. So I think there's an element, of course, we did not expect that we didn't expect that it wasn't going to be easy because having been in the property market for a long time, we also have the knowledge and experience about what the property market is all about. So, yeah, that is the story. That is how we were able to navigate through those initial hiccups that we experienced. But all along, it was always our intent to see this REIT go through. We knew that it had challenges because, again, we saw from the listing in November 2015, we had seen first of all, we knew about the uptick in terms of the initial offering in November 2015. And the price had always been a challenge. So I wouldn't say that was surprising. There are things, we knew there were issues, but we also believed we have the capacity to successfully address those issues. And that is what we have been doing for the last 3 years. Yes. Yeah.
Maybe just to push on the, sorry, the question of Taskies. Just how sizable is the arrears book if it still exists?
So ultimately, and I think we've disclosed this in our books, the ultimate amount of money owed after we leveled distress upon them was about 26 million shillings, which we then wrote off. But of course, we hope that eventually there will be a recovery process. As you know, they've gone through a liquidation process. Ultimately, at some point, we hope that we'll be able to recover some of the money. But we've successfully dealt with that in our financials, and so that is information that's available in terms of accounts.
ILAM went through a valuation write-down, I think it was a year or 2 years back. How does it fit within this larger agenda? Because it looks like there was a pipeline of a sequencing of events which built this restructuring.
Well, it was really a reflection of, remember that we've also gone through a period when we had, even in terms of COVID, and therefore, the valuations were actually affected in terms of, there are two major factors. There was COVID, but there was also the fact that we had an anchor tenant that was struggling in the mall. So those two factors contributed significantly to the write-down. We also had one of our properties that had been vacant for a while. So the whole issue of the valuation was really to reflect the realities of the market. And we owe it, you know, we therefore had to ensure that we correctly and adequately reflect the realities of this in our valuation.
When you took over this REIT in 2020, what was the idea, what was the goal, and how does it change now?
The goal was to grow this REIT. That was, you know, basically participate actively in the property market through the REIT. And I should also mention that this came by way of an acquisition. And we already had intentions of starting a REIT. And we actually had a REIT manager license. And that is actually how we ended up being the preferred bidder for the business that was for the exiting, Stanley was exiting. And so our intention was to really be able to actively participate in the market through REITs and offer the market opportunities for property investment. And initially, in fact, our thoughts were actually to offer, when we were applying for a REIT manager license, our intentions were to be able to present property investment opportunities for our pension funds. And that is the direction that we were seeking to take. So this presented an opportunity. And we continue to have some of our clients who have been investing in the REIT. It's taken a bit of time for them to see the change and transformation that they desire, but we believe we are setting the REIT on a path to be able to satisfy them in terms of the expected returns that they can get from the REIT. So I think it's a journey that we started 3 years ago. It's had its ups and downs, but I believe all this is learning, and I believe it has given us experience and knowledge about how to proceed to the next stage in the growth of the REIT.
All right. Einstein, the proposal to exit the mains market and go into the USP market, I look at it and I wonder whether, one, it's a statement from ICA regarding the level of sophistication of investors in this market, and essentially you want to cushion yourself from the vagaries we see in the mains market? And two, is it a reroute indicating we should have taken an alternative route from the outset? We've just realized that.
I think I'll start by answering that the way in the second point you've made. It's a reflection of possibly the route that the REIT should have taken at that time. So I'll take you back again to the history. If you look at the listing in 2015, November, I recall the REIT was looking to raise about 12.6 billion shillings and achieved a subscription rate of 29%. So out of a pipeline of about 12 assets that were going to be acquired, only 3 were acquired by the REIT. What that meant is that the critical mass that was required to start off the REIT did not materialize. And therefore, I would say it started off on a back foot, and was not able to move and progress at the pace that would have been expected, because at the end of the day, what you're looking to do is to be able to have a portfolio of assets that will then be able to generate adequate returns that will enable the REIT to cover its costs and also make returns to the investors. So that, as a result of that, that is partly the reason why, again, the share price was significantly affected by that significant challenge that occurred right from the beginning. And therefore resulted in the REIT never ever actually being able to recover from that position up until this transaction that we announced. So I think in view of what happened, and in view of that history, it's probably a reflection of the fact that it probably should have used a different route to get to the market. And it's not lost on us when you look at the subsequent REIT that have come to the market. They haven't actually gone to the main market. They've gone to the at least USP platform, and then the other one has also gone on to the restricted market. Because the reason is because it needed time to be able to grow and be able to mobilize the assets that are required away from the vagaries of the market. So in a way, it answers your question those are the two key factors that I think have affected the performance of the REIT. And our restructuring efforts are in a view to address that specific challenge.
Okay. Could you speak a little bit to the premium that is being offered, and why it's of interest to me is because I ask myself whether this is an indication of the level to which you think this unit has been trading at a discount in the market when you decide to give guys an 83% up. Of course, you want to mop up as much as possible, but I'd just like some level of color around this.
Again, we went through, actually, we've arrived at that figure through a very scientific process, and we've weighted. We've carried out different methodologies, including dividend discount models, the market, the net asset value, and come up with a weighting based on our assessment of what contribution those particular methodologies and how they apply in a market. So there's a very scientific process, and we've actually outlined it in great detail in the conversion offering memorandum. But what I would say is that it was important to also, having looked at how the share price has performed and having arrived at what we felt was a reasonable valuation, and also looking at the outlook as well, and essentially what has happened in the market, we felt that that would be a reasonably attractive premium to the market. And I think looking from the feedback that we've received from the unit holders, I think that is a fairly reasonable premium, especially when you look at how the stock market has been performing lately. So that we felt was an adequate incentive to attract the unit holders to consider making the redemption.
Okay. A while back, if I'm not wrong, there was a conversation around disposal of some non-core assets. How far are we with this, and And I know this is subject to valuations, but how much would you be looking to unlock from this?
If we look at the, yes, we work, one of the issues that we are addressing is optimizing the portfolio that we have. So we took over the REIT, and it had the assets in the portfolio, and we needed to look at what are the things we need to do to ensure that we are able to position the REIT to offer the optimal returns to the investors. So we looked at the existing portfolio. We have some that have been doing well, others that are not performing, and including some that have been vacant for quite a while. And so we felt that it was important for us to make the decision to dispose of those properties. So we've gone through a process where we've had even ratification by the unit holders at the AGM for the disposal of the properties. And I'd say we've made significant headway in terms of concluding on that process. And we believe that we will be able to, again, this is subject to the valuations and the prices in the market, but I believe we'll have a very clear picture by the end of the year in terms of what we will be able to realize. But I would say we are making quite some headway in that process.
Einstein, how do we expect the Fahari REIT to change, if at all it will change, post the restructuring in terms of its posturing in the market and the sort of assets it eyes?
So if I look at why we are here in terms of this stage of the transaction, we are here because in 2021, after the conclusion of the 5-year strategy that was set up by the previous REIT manager, that was expired in 2020, we then decided that we were going to carry out a strategic review of the REIT in order to plan for the future. And one of the things that we did was we engaged a consultant who then engaged in a very thorough strategic engagement with stakeholders in the property market and REITs, from the regulators, the NSC, the IFC, unit holders, fund managers, a wide cross-section, probably more than 60 different players. And the conclusion was that in its current shape and form, it was likely to continue, in a state of inertia. So there needed to be some radical shift and decision that needed to be made in order to position the REIT in the right, structure. And again, one of the things is, of course, the fact that we needed to, and even in the investors and the unit holders, they had also indicated that the supporting the growth of the REIT in its current state would also not be something that they would look favorably at. So we needed to address those issues. Now, once we conclude on the transaction, and our expectation is that we are now positioned to be able to get into the stage of now growing the REIT in terms of property acquisitions. And we have very ambitious strategies in terms of growing the REIT over the next, in the next years, because that will then be able to give us the flexibility. And this shift in our listing will enable us to have the flexibility to carry out the necessary actions to position the REIT for the future. So in terms of change, yes, more assets, bigger assets, and continuous engagement with our investors in terms of information and understanding in terms of the property market in general. So you'll see a lot more in terms of growth. Should we be able to achieve the strategic objectives, and we are clear that we want to succeed in getting the REIT to achieve the expectations that the investors have for it.
I'd imagine that also infers that we should expect some relatively aggressive capital raising.
That should also be on the cards, yes, because at the end of the day, again, property being requiring heavy capital investment, that is also an aspect of what we would be looking to do in order to be able to grow.
Einstein, some have argued that the challenge with REITs is that we want to persuade a market that it can go into real estate indirectly in a market that is inherently skewed to go directly. I want to own my parcel of land. I want to own my house, etc. Do you think we have a market misalignment in that sense?
When I look at yes, you're right. We have a significant affiliation to property. I'd say every Kenyan considers themselves an expert in terms of understanding property. But I think we are getting to a point where we are gradually appreciating the fact that there's need to professionalize the acquisition and the ownership in terms of property collectively. And I think the regulations have helped in a way. If you look at, for instance, let me just, putting aside property, if you look at, for instance, the collective investment schemes, we've seen significant growth. The regulations had been in place for quite a while for unit trusts, say, going back to 2005 when the first unit trust came into the market. 18 years later, we've seen significant traction where we're talking about edging closer to the 200 billion mark. I think we probably are about 170 or 180 billion in assets. It's taken a while to get there. But I think over time, there has been an appreciation of the need or the importance of pooling these resources together. I see the same thing ultimately happening with REITs. Because, again, historically, REITs have not been around for not more than probably 60 years or so, even in the US and in markets like South Africa. So I think it will take time. But if I listen to what, in the market about what's in the pipeline, the fact that since Fahari, we've actually had 2 REITs coming into the market, one of which has been raising funds from investors, and the fact that there's been conversations about how, even including incorporating investment in REITs in the regulations, investment guidelines for investment by retirement benefit schemes. So gradually, I believe we'll get to a point where there will be a gradual appreciation. It probably will start at the institutional level. So, with pension funds starting, investing in these assets, and probably gradually getting to a point where it's something that is fairly well recognized. I would say, 8 years ago, there was no REIT in this market. Now we have 3. And I think gradually we'll get to a point where there will be more and more of these REITs, some specializing, and I think it's a question of, progression and history. Rome is not built in a day, and I think it will take a bit of time. So I would say from an institutional perspective, we are likely to continue to see growth in the understanding and appreciation of REITs. Maybe I should also add that we and other industry players are part of, actually have an association called the REITs Association of Kenya. And one of the things we've been doing is significantly investing in a lot in terms of investor education, engagement in policy discussions on how we can grow REITs. I think later on this month we have a conference that will, we invite players to come and talk to us about REITs and the market in general. So I think it's a question of just knowledge and information about REITs, and with time we are going to see growth and knowledge and appreciation of REITs in our market.
Okay. Speaking about REITs, and we have seen recently one coming into the market. We understand in the pipeline down the road there are a few others coming. What would you say are your key learnings so far, and how would you pass this knowledge to them?
Oh, okay, yeah, very interesting question. I think the key learning is really, of course, about one, the importance of investor education, because if I look at, so you need to have, for instance, roadshows and constant engagement. It being a complex instrument, one needs to invest significantly in investor education and investor relations, because at the end of the day, you need to get your investors to understand what you're doing, understand your strategy, what's the outlook, what are your expectations, and give as much information as you can in terms of what it is that you're looking to do. So I think that is a very key learning. Of course, I guess because of the history and what we've gone through over the last 3 years, it's also the importance, of course, of the quality of your tenant. But then again, these are aspects that relate directly to property. So in terms of any property investments, you need to have good quality tenants that will ensure that you are earning regular income and maximizing on that income. Of course, the quality of the property and the assets and the investment that is required to ensure that those assets are in excellent condition to continue to generate that returns that you expect. So I'll divide them between the lessons relating to the REITs and investor relations and then the aspects to do with property investment and management. All of which are lessons that will enhance our understanding and our ability to deliver and grow these REITs.
I see. As we dial down our conversation, the issue has been raised with me whether the regulatory provisions around the dividend payout are perhaps too ambitious in this market. What did you say about that?
Well, so we've been doing this now the REIT has been listed for probably 8 years now, and of course there's the requirement to distribute income to the unit holders. You see, at the end of the day, is a balance between ensuring that, of course, on the one hand, you have the income REITs, but you also have the development REITs. And from an income perspective, the expectation is that you are investing in assets that are already existing and that you're able to immediately earn income. And there's a balance between ensuring that you're earning that income, but also meeting, because remember the REIT also has tax exemptions, and one of the things about the REIT is that you're able to pay regular dividends to the unit holders. So there's a balance that you need to maintain. Of course, what it means is that you are not able to have adequate capital to enable you acquire other assets. But speaking from the perspective of Fahari and what we've gone through, ideally, we should be in a position, even based on the asset base that we have, to be able to, even within those regulatory requirements, with critical mass, it should be possible on a continuous basis to be able to utilize just from the existing portfolio that you have and the income that you're able to earn and the capital you raise to be able to continuously grow the investment portfolio. But yeah, there's some credence to what you're saying, but I think that conversation, at least from our history, will see that we have been able to meet those expectations, but of course at the expense of growing our asset base. But we've also learned lessons in terms of what it is that we need to do to ensure that you have a quality portfolio and that you're able to meet the expectations of investors. But I think on a continuous basis, we're also engaging in policy discussions on these proposals.
Okay. Yeah. For the avoidance of doubt, someone might be watching and wondering, first of all, who is a non-professional investor? And secondly, what becomes of them after this? So maybe just clarify for us.
Thanks. So according to the REIT regulations, a non-professional investor is an investor who has holdings with a value of less than 5 million Kenya shillings. When you look at the value of that, the 5 million against the redemption offer price of 11. So that would be the benchmark or the threshold is 5 million Kenya shillings worth of units. And then in terms of what happens, so the investors, the non-professional investors, have the option of accepting the redemption offer, which is the reason why we have the offer period going on right now. 2, they can also top up and raise, buy additional units in order to get to the threshold of 5 million and above. And the other option is not doing anything, in which case what will happen is that they will be put in a bundled nominee account together with other investors, other than non-professional investors, but then they still have sight of the holdings that they have. But now the participation in the REITs in terms of actions and voting will actually be collectively through that investment vehicle. But they still have their holdings, and they will continue to enjoy the rights that other unit holders have in terms of receiving dividends when they have when those are declared and announced.
Okay. Just close this conversation for us, Einstein. And I know you've mentioned that beyond the restructuring, we want to go into acquisition of assets. Could you put a multiple to it? How much of your current value of assets would you like to be in the next 5 years?
Yeah, I'd say we would want at least to be double our asset base, within the next 5 years. And it's a plan that, and we believe we are confident that we'll be able to get there. But it was necessary for us to get there. We needed to have the right structure and be on the right platform to be able to now propel and grow to the level that we seek to get to.
Thank you very much. That has been our conversation with Einstein Kihanda. Let me get this title right. CEO for ICA Lion Asset Management. You know, we have a couple of CEOs in this building. And we shall keep an eye for Friday when this offer closes and we get the results, and we shall notify you how the turnout was.